I do want to talk more broadly about the markets, though. Welcoming our next guest. Joining us, Andrew Arons, founder and partner at Synergy Advisor Management Group. Andrew, great to have you with us this morning. It's nice for me to look at the big board and see a sea of green for the first Friday morning where we've consistently had green on the board. I'd love to get your thoughts on the action we've seen so far in the month of December.
Yeah, it's been a little bit rocky. As we go into December, we're starting to see the markets pick up a little. A lot of money flows into the market typically throughout the end of the year. And it looks like we're going to be finishing, in my opinion, on a pretty good note. So, stocks are close to all-time highs.
So if we're finishing on a pretty good note then, Andrew, is it safe to say that you think that we will have a Santa rally?
I think we're going to see the markets pick up, and I think we're going to probably see a Santa rally like we typically see. Yeah, I think that's going to happen this year.
And how about with the Fed? As we close out this week, next week, all eyes will be on the Fed. We did get the PCE data this morning, but again, important to note, it is from September, so it's not the most recent data. As far as your expectations for next week, what does that look like?
Yeah, I think we're going to see a cut. I think it's going to happen, and I think we're going to see continued cuts through the beginning of the year as well. And this should all, help the market. The market, definitely bakes some of this in a little bit here, but I think we're going to start to see it.
And we've had a couple guests come on and say that they have either a belief or a concern that the cut itself, while they do believe the cut will happen, and it is, like you said, pretty much baked in already, will be hawkish. Do you think that the cut itself matters most, or does the tone matter here? And might we see a different Jerome Powell than we traditionally see because he's basically on his way out?
Yeah, maybe we will. I don't know. I can't predict how he's going to act and what he's going to say. I would think that it should be positive for the market either way. With a new Fed chair going to be coming in next year, and hopefully with the Fed cuts and some tax cuts next year, I'm predicting 2026 to look pretty good also.
All right, so 2026 is also predicted to look good, which means I have to ask you about the AI trade and bring up the AI bubble conversation. We did see this pullback in tech. We have seen a resurgence in concerns about valuation and this AI trade. If we're looking at AI like a baseball game, where do you view us in terms of innings?
Yeah, I've been saying this for a long time, but I really think we're in the second or third inning. I really think we have a pretty long runway here. And I think we're going to see, good earnings next year. The AI investment cycle is still in the early stages here. And I know that valuations may look stretched, but earnings are some of the best we've seen, in years. So the market overall looks pretty good to me right here.
So this recent pullback isn't a cause for concern for you. This is just more of a dip than a reset or a reversal.
Yeah, I was recommending our clients to be buying the dip, and I was on the last time I was on, I was saying I would be buying the dip, and we've seen the market come back a little bit here, and I expect money to be flowing in the markets. Look at the Russell 2000. We're starting to see the market broaden here, and that's a really good positive sign here for the market, in my opinion.
Yeah, certainly. And small caps, I think hoping to get that boost off with the Fed rate cut decision next week as well. But while we're talking big tech, you sent over some stock picks, and a few of them are mega cap tech. So, your first one is Amazon. Walk us through your thesis on Amazon.
Yeah, look, Amazon is just so strong, and they're doing well. And I think they're going to continue to do very well here in the holiday season. They've put themselves in a really good place. More than half the population has Amazon Prime. They have 180 million members. Amazon same-day service is growing very rapidly, as you know. And, I think they're going to be a huge winner here during this holiday season where people are seeming to spend right now. So, I continue to see them do very well. I also like Meta here. I think, we got a little bit of a discount here to be buying Meta stock, where it's currently trading right now. And, they're a big part of the AI trade. And I continue to think that they're going to do very well.
All right, so let's talk about Meta really quick. What part of its business do you think is most underappreciated by the markets? Because we saw Meta get hammered after its earnings, now being slightly better received after some reports that it's moving away from some of its metaverse resources and focusing more in this AI wearables space. But its valuation is still arguably, at least in conversations I've had, people have referred to it as cheap.
Yeah, I mean, look, the valuations, I mean, the PE ratio on the stock is lower than it's been in years. I mean, and, the valuation just seems pretty cheap. I mean, the stock is off 20% off its all-time high. And, I think we're going to see, them form some partnerships in AI. And I think that's going to benefit Meta very well.
And Amazon's valuation also still pretty well below its historical average as well. In terms of Amazon, you mentioned the holiday season being strong for them. Do you consider this to be a long-term hold and the street is just underestimating the long-term earnings power here? Or is this something you're going to re-examine once the holiday shopping season is over?
Well, Amazon has really zigzagged this year. It really hasn't gone anywhere. I mean, if you were able to pick up some shares when we had the dip earlier in the year, you've done very well with Amazon. But if you've held it the full year, it hasn't done much. And, I think it's when Amazon is kind of in a zigzag area for an extended period of time, I think we're going to see a breakout here in 2026. So I wouldn't be surprised if you saw Amazon do, some nice returns in the upcoming year.
All right, and then you've got one final one that also ties its way back into shopping. We've gotten some really impressive earnings from retailers of late, showing that we have a pretty resilient consumer right now. Your last pick is Lululemon. Now, they are down more than 50% year to date, but they're seeing, some positive moves as the retail space is looking strong these last couple weeks.
Yeah, I mean, I think, Lulu is in a good position here to pick up some market share here over the holiday season. They have a new partnership with the NFL, which could provide revenue boost for them as well. But I do think, their sneaker division's doing very well. They're doing very well overseas. And, the tariffs hurt them earlier in the year. The stock sell off, huge sell off in the stock. And I think we're going to start to see the rebound here as they do very well during the holiday season.
Andrew, we appreciate you being with us this morning, and I hope you have a wonderful weekend. That's Andrew Arons, founder and partner at Synergy Advisory Management Group.